finance needs to be democratized. First off, read this disclaimer carefully. And remember, like, sub, share, and comment to gain access to all of the great content. I have made a theme that I call Democratizing Finance. It is a theme that is really a hot topic, and there are stocks that are basically about this, all about lowering the barrier of entry. For a long time, finance has been something for the elites, access to the financial markets, access to payment platforms. But companies like Square and Stone, they've made that so much easier. And the company we will look at in this video is called Stone. Payment platform, very good performance as far as the 52-week low goes, and you can see that the overall theme is massively outperforming the S&P 500. These are big moves. So let's look a bit at Stone. Here is the company's website. They are similar-ish to Square, helping you turn opportunities into successful business. Through technology, we'll provide solutions to help entrepreneurs increase their sales and productivity, becoming more effective. So here we can look at their solutions. Not your ordinary point-of-sale solution. Stone was born to assist customers for all over Brazil with the best technology on the market. So for small and medium-sized businesses, digitalizing retail with one click, intelligence for your digital business, smart financial management, TEF solution for you to sell more. So basically they have a nice portfolio here of solutions. Okay, so that is what the company is about. Let's now look at the seasonality. We don't have that many years here. Hence, we should be very careful about drawing conclusions based on this seasonality. It is, however, clear that December historically has been a weak month. But we only have 3 years, so be careful about drawing any conclusions. So here is the charts. This is all the data we have for Stone. It's not been public for that long, hence we need also here to be a bit careful about drawing conclusions, but something that is pretty apparent is that it is sensitive to the overall market going down. This was, the pandemic crash. That was very bearish. Hence, it is certainly correlated with the markets. It plunged a whopping 62%. After that we've had a massive, monstrous rally. We are very overbought here on the weekly data points. And you can see here, well, let me look at the accumulation distribution on the daily data points actually. But anyway, we are just very, very overbought. Very euphoric. Hence, even though the bulls, yes, they are in control, this is the kind of stock that I would like to buy on a correction, after a correction that is. Now it is looking more attractive as a short selling opportunity. Let's go to the daily data points. Okay, loading the moving averages. We are very overbought here on the dailies, and you see here that historically that has triggered sell-offs in the past. So that's, well, at least some pullbacks. So that's a risk. You can see here that the accumulation distribution did not, really corroborate this rally. There is a disconnect here between the volume, the buying volume, and the price. And you can see here that there's a 96% positive correlation here with the S&P 500. So basically, yes, the bulls are in control. This is bullish. However, it is sort of so bullish that I'm starting to think as a contrarian. This one is really pushing it a bit too far. Hence, I think that there's a very high probability from a charting perspective that we will see a pullback. That opens up the door for short selling. Potentially waiting on the sidelines and buying after the correction. Sure, could it roar higher? It could, but let's explore some other additional data. let's go here to the fundamentals. Okay, so here you can see also another chart. You can see that based on this trend channel, we are touching the upper part of the trend channel. Historically, that has been a rejection level, further corroborating a more bearish thesis. Looking at the fundamentals, we are way ahead of the fundamentals. Big time. Very good performance. That's great, of course. Applause for the performance. Bulls have been in charge big time. Looking at the average analyst price target, we can see that they suggest a minus 22% downside, okay? Because the price target is $56. We are way ahead of that. If we go to Saks.com, they have a number 4 sell, F value score, F grow, but they do have a momentum score, but the VGM is still of D. And the industry rank is in the bottom 24%. I do not agree with the industry. They categorize it as internet software. I do think that this is fintech, basically. Even though I have a bit more specific categorization. Market cap $20 billion US, so there's some size here. Okay, hence if we do take the evidence together here, okay. Looking at the theme, I am definitively bullish long-term on democratizing finance. I'm also bullish long-term on Stone. Long-term, I'm talking about looking years into the future. If we do look at the coming months, then when we looked at the seasonality, which we should be a bit careful with, but looking at the seasonality, it is suggesting weakness. If you look at the charts, we are just very overstretched. The fundamentals as well, way ahead of the fundamentals. There simply are too many data points suggesting that a correction is on the horizon. We have simply just gone too far. The bulls just ran too much. And it's mean reversion, it affects everything. Everything that is good in certain doses can become a negative if pushed too far. Like exercising, okay? Exercising is healthy if you do it to a certain extent. But if you push it too far, it goes from being, oh, Bob is really fit, to Bob is going to exercise so hard, so much, that he might have a cardiac arrest. Something that initially was healthy and good turns into something that becomes actually dangerous. Hence, moderation, it is very important. The traders of Stone & Co. has not been moderate, gone too far. So yes, I do think there is some pullback on the horizon. If you want to use bearish strategies, there are opportunities for that. There are options available as well. It is shortable. We do not have a screaming bearish setup yet in the charts, in the sense that we are seeing actual clear weakness. Hence, yeah, because one of the classical signs, you could say, if you have a candlestick that goes like up this, we go up like this, but then you close on the low end of that candlestick on the day, that is like a classic sign of bull exhaustion. We are seeing some exhaustion here, but it's not like those screaming, okay, now is the time. But then again, you need to ask yourself the question, if you are going to short it, how much upside are you risking here, given that we are very pushed as far as the trend channel, as far as RSI, as far as the fundamentals, as far as so many things goes. Okay. Anyway, okay. Whatever you do, of course, you want to be very careful in this market. It is a bit wild. Many sectors are heavily stretched to the upside, and the mean reversion is a universal phenomena throughout the universe.